Hello, welcome to Business Week, the program that brings you top business stories that made the headlines during the course of this week, including special news features, interviews, market data, and much more. Welcome to the show. Here's the highlight of the biggest stories which tracked for you over the course of this week. On the local front, the Nigerian government borrowed a total of 6.7 trillion naira between January and November 2021. In other financially related matters, the Central Bank of Nigeria has also disclosed that capital importation into the country fell by 32% to hit $500 million in October 2021 from $660 million recorded in September. In the power sector, the Nigerian Electricity Regulatory Commission says power generation companies were paid a total of 311.1 billion naira after providing an invoice of 614.6 billion naira for electricity supplied between January and September 2021. And on the foreign scene now, the Bank of England forecasts the consumer price index will peak at a 30-year high of around 6% later in April this year due to higher energy bills, and it would also take more than 2 years for the CPI to return to its 2% target. The core consumer price index, which excludes sometimes volatile food, energy, alcohol, and tobacco prices, rose to a record high of 4.2% in December from November's 3.9%. And now looking at some internal probe, Credit Suisse chairman Antonio Horta Osorio has also quit following an internal probe into his personal conduct, including breaches of COVID-19 rules, raising questions over the embattled lender's new strategy as it tries to recover from a string of scandals. And China's Sinopec Corporation received its first cargo of liquefied natural gas under a new term supply deal signed last year with Qatar Petroleum. State-run Tianjin Daily reported that the tanker Al Salah carrying 94,000 tons of Qatari gas was discharged into Sinopec's Tianjin terminal earlier this week. Well, it's now time to bring you special packages prepared by our correspondents.
1 million bags of rice paddy make up these magnificent pyramids, described as one of a kind on the continent. Farmers who grew this huge volume of milled rice are beneficiaries of the Central Bank of Nigeria's Anchor Borers program, and it serves as repayment for their loans. Millers around the country have been mapped out to uptake these paddies, and sales of their output will be closely monitored in a bid to check the commodity's price.
The program speaks loudly in its giant strides as it has increased access to finance by our rural farmers who before now were virtually excluded from the financial system.
Already, the Anchor Borers program has helped cut down rice importation, a far cry from what obtained in the past. The erstwhile 1.8 million yield per hectare of rice before the program has also become 6 million tons. The country's production of rice has grown to 9 million metric tons per year.
By 2016, Your Excellency, rice imports from Thailand had fallen to just only 58,000 metric tons. As at the end of 2021, they only exported 2,160 metric tons of rice to Nigeria, thereby saving Nigeria foreign exchange and helping to preserve jobs for our people.
The goal is now to build on existing successes in rice production.
The job is not done. We shall not relent until the availability of rice as a staple food is also at the most affordable rate for ordinary Nigerians. That's the next agenda in this campaign.
Giving a rundown of the command's financial earnings and anti-smuggling activities for year 2021, Comptroller Festus Okun says that 199.5 metric tons of export goods with a free on-board value of more than 132.5 billion naira were handled within the period. On the command's remittances to the Federation account, he reveals that a total of 224.4 billion naira was generated, indicating a 19% increase above the earnings generated in 2020.
In the year 2021, the command generated a total revenue of 224 billion 470 million 113,700 33 naira only. When compared, this showed an increase of 35 billion 122 million 548,424 naira only, when compared with the total revenue generated in the previous year of 2020.
Also noting the command's anti-smuggling activities, the controller, accompanied by top officers of the command, showcased falsely declared unregistered medicament, among other goods imported into the country. He states that considering the recurring threats to national security, 100% examination of cargoes is key to uncovering illegal importations.
This is drug for those who are on medication for high blood pressure. But on scrutiny, we discovered that it doesn't have any regulatory approval, no NAFDAC number. So on that basis, we decided to seize it. One, the importation contravenes section 46 of the SEMA, which is improper importation. All this profiling we do, not that we just go for mere physical examination. There are times before a container is even positioned, we have an idea of what is likely to be there.
He reveals that while the command has emplaced various measures to enhance facilitation of legitimate trade, port traders also need to comply with extant laws to effectively drive it. Ifunanya Eze, TVC News, Lagos.
And it's now about a time on the show where we bring you the feature for the week. Now, we're taking a look at the latest Consumer Price Index report from the National Bureau of Statistics, looking at the December figures. Thanks for still staying with us. Let's now deal with the crux of today's discourse. Inflation has become a bugbear for the Nigerian economy in the last 2 years, but from the end of the first quarter of 2021, the average consumer price index level fell in 9 consecutive months until its recent December 2021 reversal that saw inflation rates rise again. In the latest CPI report released by the National Bureau of Statistics earlier on Monday, Nigeria's inflation rate fell for the first time in 9 months as the headline consumer price index rose by 15.63% on a year-on-year basis. Analysts had expected a slower decline in inflation rather than a rise. According to the Bureau, now the rise was as a result of the surge in demand for food and other items during the festive season. December's inflation figure represented 23 basis point increase in inflation rate compared with the 15.4% which was recorded in the preceding month of November. Food CPI rose 17.37% year-on-year, which is about 16 basis points higher than the 17.21% recorded in November. And on a month-to-month basis, food inflation rose by 2.19%, which is the highest since May 2021. Meanwhile, core inflation last month increased by 2 basis points from 13.85% in November to 13.87%, while rural areas were also the most hard hit, recording an inflation rate of 20%, while urban areas saw a 15.9% growth in CPI. At the level of subnationals, Kogi State once again recorded the highest annual inflation rate as its CPI rose by 18.37%. Overall, the fiscal year 2021 inflation rate settled at about 16.98%, breaching the 16.5% forecast of the World Bank, a reflection of the impact of the depreciation of the naira as well as a plethora of supply-side problems that have kept wholesale and retail sales prices going up. Joining us on the show to discuss this and more, I have Chief Executive Officer of Finance with Mukhtar Mohammed. Thank you very much for joining us on the show today.
My pleasure, David.
Now, this uptick in the inflationary pressure at 15.63% for December is a takeaway from the consistent decline we've recorded for some time. This does not necessarily come as a surprise, as some analysts have said the major cause is looking at the prices of goods and services driven by the Yuletide activities and demand. But what sentiment do you share really? Or do you think this is the beginning of the forecast of the World Bank, which says that it is projecting Nigeria's inflation to be one of the highest rates globally? Your thoughts?
Well, the figure did not come as a surprise. And also, this is the beginning of the spike. We'll see this spike this year. But most of the challenges that will result in the spike as challenges that are induced. You have economic structural induced inflations, you have consumer induced inflation, that is market based inflation, and also you have production induced inflations. So all this we come, but that's why they are saying that we will have those inflation figures spike up, because when you talk about the market induced inflation, you begin to talk about cost of production, which definitely is going high by the day. When you talk about consumer induced inflation, you come to demand and supply because of the availability of this product. And when you talk of structural induced inflation, then you need to look at what the government is doing, especially in the area of taxing of companies. A lot of companies will pay more tax. The financial bill has come. Even a lot of investors are going to be paying more taxes. So also you mustn't take your mind away from the exchange rate volatility. That's also economic induced inflation, because we are running a market based or control based exchange rate regime. So this part of the problem that we will encounter this year, and this is the beginning of the spike. Remember, we have not even gotten to where we think we'll get. This at the beginning of the year, and some of these in the structural base, market base, and production base are not beginning to take their toll yet, and that's why I stand with the World Bank in saying that our inflation will spike, not because of the microeconomic stabilities, but who could just be seeing those spiking because of some of these things I just listed.
Okay, now, irrespective of the World Bank's forecast, what's your outlook based on inflation figures that we have, local data versus government's forecast, which is also predicting that we'll see inflationary pressure moderate at about 13 to 14% this year, especially as we're also having conversations around fuel subsidy removal and increase in electricity tariff taking center stage. Do you think we have any chance of seeing a plateau or some decline going by these local figures away from what the World Bank is stating?
Well, David, it depends on where we are, what we're going to see. This morning, we heard the Senate president saying that the president has not instructed any of his officials to say that they will remove subsidy on petroleum product. But one thing that we are certain, there will be an increase in electric tariff. Also, this morning, we're hearing that the government committee that was headed by the governor of Kaduna State, Nasiru El-Rufai, also recommended a price. So there's a little bit of confusion in there, but by and large, from what we got from the Minister for Petroleum Resources, if it's going anything to go by June of this year, also the Minister for Finance will see the removal of subsidy. So when those things begin to play, then you definitely will have to see a spike. But remember that this removal might not come until sometime in June, July. And also remember, Labour already saying they will not accept the removal of subsidy. But one thing that we're very certain, like I said, is that there will be an increment in electric tariff. And so that also will have a snowball effect in all other areas of our economy, especially in the manufacturing sector and in the real economic sector. So we'll see those inflation figures begin to moderate a little as we go, but there will definitely be a spike, especially when we see the issue of this electric tariff and removal of subsidy comes into play. Then we'll see those spike. And even if we don't see a complete removal of subsidy, no matter the removal, we'll see those spike, unless we don't see it. But again, like I said, electrical tariff will definitely spike a little bit of inflation, but it will not be as much as what we will see in terms of the removal of subsidy. I think we spike those inflationary figure going forward, but we will not see that playing very soon. Like this result we were made to understand, we were made to understand it has to do with the Utah season. It has to do also with demand and supply. It has also have to do with the coming dry season, which will also make a lot of goods and services a little bit scarcity.
And now let's look at the solution to the inflationary pressure we are dealing with a little bit from a broader perspective. Some analysts share the view that to tame the current inflationary pressure, Government needs to reform the foreign exchange market to stabilize the exchange rate and also reduce volatility, address forex liquidity issues through appropriate policy measures, also look at security concerns causing disruption to agricultural activities and food production, look at addressing productivity issues in the real sector of the economy overall. How feasible do you think these can be achieved as the Buhari administration takes its last active year before exit and then a transition for a new administration? We need a clean slate, wouldn't you say?
Unfortunately, David, I don't think the coming administration will have a clean slate because they'll have a lot of economic challenges to deal with. What you pointed out here, the main challenge we have at the moment in this country is the exchange rate volatility. And this exchange rate volatility, like you said in your question, has to do with the liquidity shortfall. So demand and supply still have to come and play there. And we are not seeing any improvement in that space at this moment. And I don't think we'll see it because when you look at the financial bill they said that has been passed into law, it's not encouraging investment into this sector, especially direct foreign investment. We don't seem to want to attract investors. What we're looking at tax. How government can generate revenue to build up the economy. Nobody's looking at government using their tax as a means to buffer our reserve, and foreign direct investors to come in, more portfolio investors to come in. But what we are seeing in this as it stands now is that government is looking at way to improve their revenue by taxing. And they are not looking taxing as a way to grow the economy or the way to address the liquidity challenge. So, and the CBN have not come up with a product also to attract foreign direct investment to boost our FX, our foreign reserve. And now, not to forget that the price of oil has gone up and is even moving towards $19 per barrel. But the more we see the price of oil, because of the challenges that we have in the terms of subsidy payment, in terms of the most of the refined crude product are being, we sell our crude and we bring in the refined product. We are not seeing the benefit in terms of those price movement. So it's a whole lot of challenges. Like I've always said, CBN has to come up with a product, and the only product they've been able to come up is from the diaspora side. But they need to take it a little bit further, see how they can liaise with government to begin to attract foreign direct investors. That has been what has stabilized our currency, especially the portfolio investors, for a while. So by the time we attract those ones, they will begin to do the needful, which is more or less like looking at the microeconomic stability, looking at how our manufacturer sector will begin to go out to earn foreign exchange. So these are things that are doable, but in the short term, there are major challenges, but they could be addressed with structural reforms, like you said. But unfortunately, like I said, I don't think we are looking at those structural reforms, especially in the area of using tax as a means to attract these investors. We are just looking at revenue. And where we are not getting the revenue, we are looking at how to borrow to begin to do infrastructure. We are not even looking at our infrastructure as a cash cow to attract revenue into our economy also. By using that also as a means to say, build and operate level with the public-private partnership like it's done in any part of the world. And those that are employed will be those that will pay tax. Even the companies that are going to be running this will be paying personal income tax to the government. Government is not looking at that. We are just looking at the short term.
But quite worrisome is the reality that with inflationary figures still at double digits, food crisis at worrying levels, the average Nigerian can barely feed. So many people are falling under the poverty line at faster rates. Unemployment rate is also growing at a much faster rate than the projected GDP growth now. How do you see us making any progress with this forecast of a growth rate of about 2.5% or as high as 4% based on where you're getting your figures from? Do you think we have any chance of stimulating the economy much more aggressively, cut down the cost of production, and also look at government's borrowing and overall just bring down the cost of governance, reducing all of the elements here that one way or the other affects the pricing of the average consumables we have in the country?
David, you brought in two areas. Out of those two are the cost of borrowing and the overall cost of production and the cost of governance. If you look at these 3 points you enlighten here, it's only one I think we should be able to address if this administration wants to do. and that will be the cost of governance. And I don't think they have the political will, especially in an election year, to do that, because that means reduction in special senior special assistant. But what would rather see that during an electoral year, we see a hype of activities whereby you begin to look at political permutation and begin to bring people that you think are going to be big wit into governance in the way to pacify their people so that they can give you their vote. If what we see previously is anything to go back. So for me, that is it. But in terms of the challenge we have in food, I think that the security challenges, especially in the insurgency in the northeast and north center, I can tell you that I think the government is doing a lot in that area, but security will definitely have to improve with time, because we are not seeing the type of attack we used to see from the terrorists. But what the government is dealing with more now is the bandits, and with the government have already classified them as terrorists. And I think with the way they will begin to address the issue, there might be a solution, but it might not come in so soon. So we'll still see those challenges in the area of cost of production. And remember, cost of production is just sometimes because of the security challenges, not only by the farmer will go to farm, the farmer will definitely go to farm, but the cost of moving his goods to another point of sale, that is the major challenge because of the security challenges. And we are made to understand that some of these bandits and some of these terrorists also will force the people to pay tax when they have to do. So what happened then? So they will increase the cost of those products. That's what is definitely happening. Will we be able to meet the projection? Look, most of the projection that we have been able to meet this year was not because we met it because we've done anything great, just because we've opened up other sectors that were shut down, especially during the pandemic, in terms of the productive sector. And those sectors are now being open. So we see a gradual improvement in those sectors, and that will add to our GDP. Definitely, I'm not doubting our GDP. The World Bank is not doubting us improving our GDP. They see an improvement in that space, but that is also tied down because a lot of productive sectors will be opened up. And then the one you're talking about, unemployment. Unemployment is one time bomb that this administration have not been able to address right from the day they came in. Whether we've seen a spike in unemployment, will they be able to address it in the next 6 to 1 year? I don't think so. They have the magic word to do that, because we are looking, unemployment is a bottom to up approach. And like I said, this is not a year we will be able to do that, because this is a year of election. And like I said, governance take the back seat after the first 3 months, and now we're having a convention in February. After the convention, we'll have a big wave of political activities, not economic activities, especially because we are talking about the ruling party. So it's not looking good when you look at all this permutation. But like I said, we'll see those growth in the GDP, but it will just have to do with the terms of opening up and more activities in the productive sector. But in terms of growth, in terms of employment, in terms of dealing with inflation, in terms of exchange rate volatility, those are the major challenges that we'll deal with this year. And if looking at the crystal ball with all the being word of activities, it's not looking good.
And wrapping up our conversation now, one of the markers of the pre-election year is the fact that we would also have the population census conducted. We've seen the delay we've had so far and the economic cost. It has cost us dearly. How critical would you say it is to get accurate data to develop stronger economic blueprint instead of mere assumptions which stifle any growth that we can likely achieve? Big data is the solution. That's the general consensus, the feeling we are getting. Do you see us doing better with these figures instead of the mere assumptions we regularly receive?
David, big data is the way to go, definitely. But when you talk about Nigerian population census, you are looking at the political population census, because it's even coming an election year, which I think is not going to help also. Because and when you talk about data, I keep saying that it's not that Nigeria is devoid of data, because we have the NIN. It's still there. You have the immigration services. You go there, you have your data. You have to take data. You want to go to have a driver's license, you have to take data. So you have to get a BVM. You also have to take data. So all these data are available. I think what we lack is a central body to be able to collect this data. So, but I expect that by the time we have the population census, because somebody will argue that it's not everybody that has a bank account, it's not everybody that will own a phone, it's not everybody, yeah, which I agree. But you look at the population, over 70 to 80% of Nigerians have NIN, will We'll have NIN numbers. After that, we will also have Nigerians that have banks or bank information. We have Nigerians that also they have taken immigration and APA. So it's not devoid of, because data is really the challenge. Do we have the structures to deal with this data? Do we have the political will to say the truth when these data are gotten, instead of looking at what are the political gain when you say one part of the country is not as the country, the people in that part of the country sees it is. So it's a big challenge, but data is good. It could help us if we are able to get our act right, throw out the political side of it, do it for the economic benefit that will benefit the people. Like I say, and I always say, the challenge in any economy is that once you begin to play politics with your economy, once you begin to play politics with your security, you have a big problem at hand. And that is why Nigeria need to sit up and begin to see, let's take off politics from this side. Let's begin to do what we ought to do to develop this sector of the economy. That will help us if we decide to do that.
Thank you very much for your time on the show today. It's been a pleasure speaking with you, Dr. Mohammed.
My pleasure, David. Thank you.
Well, just before we go now, here are graphic details of the total value of capital importation into Nigeria for the third quarter of this year, as prepared by the National Bureau of Statistics. And on that note, it's a wrap on this edition of Business Week. Many thanks for watching so far. Do enjoy your weekend. I'm David Alabi. Bye for now.